All right, let's jump right into this explainer by confronting a pretty painful reality. I want you to picture the struggling trader. They're staring at these glowing red and green screens, chest is tight, sweating over absolutely every erratic tick of the market, just desperately hoping that their next trade is going to be that lucky lottery ticket that finally changes their life. I mean, we've all felt that visceral panic, right? Or at least we know the feeling. But what if the very foundation of how we view the market is completely backwards? What if the secret to financial freedom isn't actually out there on the charts, but entirely inside your own head?
So is trading just a game of luck? Well, most beginners operate in what we're going to call the before scenario. And in this agonizing state, a trader fundamentally believes the market is basically a giant unforgiving casino. They're completely paralyzed by sheer terror when the market drops, and then driven by this wild greed when it surges. It's an endless, frustrating chase for some magic indicator or the perfect prediction, because, they think success is determined by luck or just having better insider information. It's this exhausting emotional roller coaster where you are totally at the mercy of external forces. But to actually succeed, we have to completely flip this script.
To guide us out of this illusion, we're diving into the groundbreaking work of renowned trading psychologist Dr. Van K. Tharp. His book, Trading Beyond the Matrix, presents a paradigm-shifting thesis that, honestly, changes the whole game. Dr. Tharp argues that you don't actually trade the market. Let me just repeat that because it's a massive light bulb moment. You do not trade the market. You trade your beliefs about the market. The market itself is literally just millions of buyers and sellers interacting. Everything else, from the candlestick charts to the moving averages, is just a belief you've adopted to try and make sense of all the chaos.
Which brings us to Section 1, Taking the Red Pill, The Awakening. Okay, think of your beliefs as an invisible filter sitting right behind your eyes. Every piece of financial news, every single price movement, every hot tip you get passes through this filter. And this filter doesn't just, process reality, it actively constructs and distorts your financial reality. If you believe the market is a dangerous place, you're only going to see threats. But if you believe it's full of opportunity, you're going to see low-risk entry points everywhere.
It's really fascinating how Dr. Tharp leans into this famous metaphor from the movie The Matrix. Taking the blue pill means just waking up in your bed, believing whatever you want to believe, that trading is just dumb luck, or that the big guys on Wall Street are out to get you. But taking the red pill, that means critically examining your beliefs to see if they actually serve you. It means opening up the hood of your own mind and asking, wait, is this belief useful for operating at a high level, or is it literally holding me back?
So we're looking at a stark contrast here. We've got our before trader, trapped in the illusion, acting unconsciously, constantly sabotaged by their own unchecked emotions. And then we have the after scenario. This is the awakened trader. This person takes 100% responsibility for their psychological state. They know that if they lose money and feel devastated, they own not just the financial loss, but the meaning they attach to that loss. They've completely transitioned from being a victim of luck to an architect of probability.
And that leads right into Section 2. The internal battlefield, psychology and self-sabotage. Once you accept that you're just trading your beliefs, you have to look at what's actually happening inside your mind. The truth Dr. Tharp uncovered after years of coaching top professionals is that market mistakes are almost never technical. Seriously. You didn't buy at the top because your chart was broken. You bought at the top because of massive FOMO, the fear of missing out. The mistakes are almost entirely psychological.
Imagine your mind is like a crowd of conflicting internal parts, kind of like a confused tiger being pulled in a dozen different directions. One part of you might consciously say, I want to be a wealthy trader. But another, deeper, subconscious part might harbor this intense fear that becoming a millionaire will ruin your relationships, or that friends will constantly ask you for money. And this internal conflict, it causes massive self-sabotage. You'll literally unconsciously break your own trading rules just to keep yourself safely inside your emotional comfort zone.
So the bottom line is simply this. Trading is 100% psychological. Now, I know some of you are probably thinking, wait a second, what about my complex trading algorithms? What about my meticulous position sizing? Well, Dr. Tharp argues that even systems and position sizing are psychological. Why? Because without the mental discipline to execute them flawlessly, they're completely useless. The market is perfectly designed to exploit your psychological weaknesses. If you have an ego-driven need to be right all the time, the market will eventually bankrupt you.
Section 3. The Rules of Tharp Think, Mastering the Matrix. Okay, now that we've diagnosed the issue, how do we actually fix it? Let's pivot from deep psychology to the practical, beginner-friendly rules you need to build a robust trading system. Dr. Tharp calls this collection of useful beliefs Tharp Think. By adopting these very specific principles, you stop being controlled by the matrix and you start actively mastering it.
Let's break down the math of beliefs, and we'll start with a concept called expectancy. Expectancy proves that success isn't about that ego-driven need to be right. You hear traders bragging all the time about winning 80% of their trades, right? But if their massive losses wipe out those tiny little gains, they're still bleeding money. Expectancy is all about long-term statistical probability. It's simply the average amount of money you make per dollar you risk over a huge number of trades. As a trader, your one job is to find a system with a positive expectancy.
And to achieve that positive expectancy, you absolutely need to understand a core concept: the R multiple. The R just stands for your initial risk. If you risk $100 on a trade, boom, that is your 1R. The golden rule of THARP is that you should define all your profits and losses as a multiple of that initial risk. So if you make $300, that's a 3R profit. By shifting your mindset to R multiples, you completely detach from the emotional weight of absolute dollar amounts and you focus purely on the mathematical efficiency of your strategy.
So here are the core practical rules of THARP laid out for us. First up, never, and I mean never, enter a trade without knowing your exact initial risk. Second, your reward to risk ratio has to be at least 2-to-1, meaning only take trades where the potential upside is at least double what you're risking. Third, exits are way more important than entries. Literally anyone can click buy on a stock, but how and when you get out is what actually determines your profit. And finally, use position sizing. Dr. Tharp uses this brilliant military metaphor: treat your trading capital like bullets. Position sizing ensures you are rationing your bullets wisely so you can survive the market's crazy volatility and actually stay in the game.
All right, Section 4, Trading in the Now, the ultimate transformation. When you combine that rock-solid psychological discipline with the mathematical rules of THARP, this is where you arrive. This is the absolute culmination of a trader's journey. It's the moment where trading stops being this stressful, terrifying daily grind and transforms into a state of effortless flow.
Think about what it feels like to just be totally present in the moment. That's what happens when you clear out all those thousands of non-useful beliefs we talked about. That loud, anxious, conflicting crowd inside your head, it just goes quiet. A profound relief washes over you because the internal chatter completely stops. In this awakened state, a trader observes the market purely for what it's doing right now without projecting their own fears or hopes or harsh judgments onto the price action. You simply see a low-risk opportunity and you seamlessly execute it. No drama.
Now, this complete evolution of a trader doesn't happen overnight. It happens in 3 distinct levels. Level 1 is just learning the rules, wrapping your head around expectancy and R multiples. Level 2 goes deeper. This is where you are actively reprogramming those non-useful beliefs and resolving those internal conflicts. But Level 3, that is the ultimate goal. That is transforming your overall consciousness. It's a massive leap where your whole reality and relationship with the market permanently shifts.
Because look, there's a massive difference between these two states. Relying purely on level 1 mechanics is still a struggle. Dr. Tharp points out that if you trade from a low consciousness state, driven by fear, greed, or desperation, which psychologist David Hawkins calibrates as being below a level of 200, your performance is going to be pretty dismal. But a level 3 transformation elevates you to a state of complete acceptance, up around a level of 350 or higher. Up there, there's no tension. Execution is effortless. You just calmly accept whatever the market gives you and you simply follow your system.
So we arrive at the final question I really want to leave you with today. What are your beliefs costing you? And I don't just mean in your trading account, but in your life. If you are still treating the market like a game of luck, you're actively choosing to stay asleep. It's time to take the red pill. Honestly examine the beliefs that are holding back your financial reality. Clear out that internal chatter and step into the absolute clarity of trading in the now. The matrix is out there, and it's yours to master.